future, it's the wealth effect. But when the bubble inevitably bursts, they have a feeling of reduced wealth, and so they tend to cut their discretionary spending, thus hindering economic growth. Thus hindering the economic growth, or even exacerbating the economic slowdown. If there is a central bank in the financial market, if a central bank is present in the financial sphere, yeah, the bank may therefore attempt to curb high levels of asset price appreciation and try to calm the tensions in the banking system. So, what are the possible causes of economic bubbles? Bubbles are not bubbles. Personally, for some bubbles, even occur when there is no uncertainty in the market. Market participants can calculate the
risk.
No, the market participants can calculate the intrinsic values by simply examining the expected stream of dividends. It has been shown that bubbles can appear even when there is no bounded rationality or assumption about the irrationality of others, as assumed in greater food theory, about which I will talk in a few seconds. So, one possible cause of economic bubbles is excessive monetary liquidity, or the inappropriate lending standards by banks. Because excessive, as Axel Weber, the former president of Deutsche Bank, says that excessive monetary liquidity in a system in connection with very low rates of interest rate can cause an economic bubble, because too much money is chasing too few assets, and both good assets and bad assets inflate in values and go from their fundamental values into unsustainable level. Okay, so what are the social psychology factors that cause the economic bubbles? So first, the greater fool theory, which is very popular among laymen, but is not approved by empirical research. This portrays bubbles as the bubble market portrays as people who are perennially optimistic about the market because they buy overvalued assets. Those are the fools, because then they, in anticipation to selling them at much higher prices to greater fools, other speculators. So this process continues until the fools cannot find the greater fools cannot find other fools, so they become the greatest fool, and there is no other cycle in this. So the bubble bursts.
So kind of a circuit.
Yeah, until the greater fool becomes the greatest fool, and you can find anyone. So the next one is the extrapolation. Extrapolation is extrapolation projecting historical data into the future, and as if some asset prices have risen before, they will continue to rise at the same rate forever. As so, the investors see that some assets bring a lot of money, and they overbid those assets. But when the overbidding continues until the investors won't overbid this asset because it will be too high and it will be uneconomic. The investments won't bring as much money as needed. So this will cause a bubble burst. So another social psychology factor is herding, because investors tend to invest money in projects which have a trend of growth, and as many and this is held by analysis. And when many investors analyze and see that certain asset is growing in price, they all tend to buy it, and the asset price inflates artificially. It's become too high. Then of course it bursts. So moral hazard is caused because some market participants are insulated from risk, and it's for a person to behave rationally, he must calculated he can get a profit with some certain risk. And usually moral hazard appears when there is no risk for a person. For example, if government helps, gives bailout to some companies for their, if they didn't have profit or have bad situation, they are kind of insulated from risk, so they don't behave rationally. They can spend much, they can give much higher price to an asset than it is, and don't get enough profit out of it.
I'm sorry to interrupt you, but hazard, isn't it connected with something hazardous, dangerous, that just vice versa, taking risks or not?
No, it's moral hazard.
No, because I just thought this way.
Hazard is kind of obstacle.
Yeah.
So they are not prepared. They are prepared that they won't have any risk. They are not having any risk by buying the assets. So they know
opposite version. It's just the opposite, not knowing that we are going to have this. Okay.
Yeah, they are sure that they will get the money because the government will have. The example of it is the TARP program, which was signed in US, which gave bailout to the companies which were during the crisis, which were very in that situation. So that's all for the presentation about the economic bubble. Now Arsen will continue about it.
I'm so sorry, I have a question for this. Speaking about the psychology factors, I just didn't get the extrapolation. Would you just explain that?
Extrapolation is projecting historical data into the future. So let's say if prices have risen, if the price of a certain asset have risen in the past, by the extrapolation it will continue to rise forever. So people buy it.
It will continue to rise for a great period of time. After, for example, after a great period of time, for 10 years it is on the up, it's not on the downstream. It will continue to rise by the extrapolation method. For example, the crises are such abnormal things that in the crisis there could be also stagflation. For example, the economy can be in stagnation. The economy can be in stagnation, but there also can be an inflation. The prices can rise. That's the main thing. The crisis is an abnormal thing, you know. Continue, Arsen, please.
Thank you, dear. Thank you.
We need your passport then.
Oh, no problem.
Passport is inserted.
Because some countries are not considered.
Also, it's not I didn't remember to say to you that our presentation is prepared in a Facebook format, but in that Facebook format we also inserted several types of presentations. For example, now Robert presented to you the Google Docs type of presentation. It was constructed by putting the PowerPoint slides into the Google Docs to present everything. That's everything online, and you can, for example, look at that presentation every day at a time.
Where are you going? Oh, okay.
Now we'll continue with present. I think you know about that.
Oh, do you know what praise is? Yes. Oh, great.
Present. Now go back to Facebook.
I know what Facebook is.
Do you know what Facebook is?
Arsen. Тахти тагет Arsen.
Sorry. By the way, you can like our page on Facebook.
You can like everything.
We want to. We will, sure.
That's bad. So now I'm X.
We don't have Facebook profile.
Now I'm going to talk about the history of bubbles. The first bubble in the history was the tulipomania. So some single tulip bulbs sold for more than 10 times, then you will become a skilled craftsman. It is generally considered the first recorded speculative bubble in the history. And the next bubble
is the Mississippi Company's bubble. So Mississippi Company was exchanging company shares for that and guaranteeing significant profits. A bank well followed in May 1721, and the French Treasury admitted that it didn't have enough metallic currency to cover its papers, its paper instruments. So that was the next bubble, and which was in France. The next bubble was in England, so the railway mania. No fewer than 272 acts of parliament were passed, setting up new railway companies, and the proposed routes totaled 9,500 miles, and around a third of the railways authorized were never built. It was in England. Next, I think you all know about this. That was the Gold Rush, and in 1840s, in 1840s, people came to California from all over the world, mainly from East Coast, Oregon, the Sandwich Island, in order to find their fortune, to find gold, and half of that on the road. Okay, now I. Now I'm going to talk about the dot-com bubble.
Allow.
Pricing.com is full screen.
Okay, the dot-com bubble. The dot-com bubble was a speculative bubble in the shares of early internet companies called dot-coms. Soon after the 1987 stock market crash, global stock markets resumed their previous bull market trend, led by computer and other technology stocks, which were traded on Nasdaq Stock Exchange. And by the early 1990s, personal computers were becoming increasingly common for both business and personal use. And personal computers have become a great asset for their users with a variety of tasks such as accounting and task preparation. So there were many business programs invented to help users, and that gave them a significant boost in productivity. And personal computers even started to compete with television, and PC video games entered the marketplace. So during those years, the operating system company Microsoft prospered enormously because almost every computer system sold had their software installed in it. So during the 1990s, the US computer industry decided to focus primarily on computer software development instead of designing and manufacturing computer hardware, because computer software was a product with high profit margins, unlike computer hardware, and software companies generated profits by selling licensed software, which was not costly to produce. And computer software was also protected as an intellectual property, which was a strong barrier to entry. Software and what about hardware companies? The hardwares which were produced by different companies were virtually indistinguishable, so that forced them to compete on price. And during the 1990s, almost all computer hardware components were produced by Asian companies due to their low manufacturing costs. So software company stocks were very strong performance throughout the 1990s, and that led to the creation of many small software startups. And those startups were created by college students in garage, and they paid their employees with pizza and soda as much as they desired. And all that companies hoped to be the next Microsoft. So eventually, many of these startups attracted the attention of venture venture capitalists which were interested in financing those startups and gain money when the company went public. And by this point, startups began to pay their employees with company shares, because when the company went public, shares would become more valuable. How the internet age started?
Comp.
How the internet age started? By 1994, the internet first became available to the general public. So a primitive form of the internet, the darknet, had been around since 1969, and it was created by government agencies to exchange scientific and military information from different locations. And during the mid-1990s, the internet had evolved as a way for people to communicate via email, chat rooms, and browse websites. Almost immediately, business saw that the internet was a significant profit opportunity, and in 1994, the Yahoo, the engine system, and the Amazon, the first online book retailer company, were created. And in 1995, the first online auction, eBay, was created. And technology stocks continued to soar, and companies continued to pay their employees in stock options. And there were even companies which gave BMWs to their new employees like a bonus. So how the dot-com bubble inflated? The booming economy made some economists think that that was a new economy where there was no inflation and the recession was in the past. But that was not like that. And during those years, many companies which were launched had even no business plans, were launched by college students, and they even didn't have any earning in the beginning. When they went public, they made millions of dollars. For example, Hats.com, which was the first online pet product retailer, was losing money, and when the company went public, it gained millions of dollars. So even there was a story that in Silicon Valley, every 60 seconds there was a new billionaire created. And how the dot-com bubble popped. So this graph shows the Nasdaq index year-over-year, and the index rise. So the peak was in 2000. The index was 5,000 points, and after that it started to go down. So reality started to sink in by 2000, and the index went down in 2001 to 3,000 points, and in 2001 the U.S. economy experienced a post-dot-com recession, which forced to cut the interest rates to stop the bleeding. And to summarize, I want to say that it's very difficult to define this in a bubble or not, and there can be many fools that will think that it's a new economy, but it's not actually new. So that was that one. Thanks.
And the continuation?
Yeah, I'm coming again.
You're again coming?
Yeah.
Yes, of course. That's once a big presentation.
Oh,
I'll
yeah.
talk about real estate bubble. Bubbles, the real estate bubble or housing bubble is a type of economic bubble which occurs periodically in the local or global markets. So increase of valuation of housing prices, which is followed by a steep decline of the prices. So the question is whether the housing bubble has a broad macroeconomic significance. And this question is answered differently by mainstream economics and post-Keynesian and Austrian economics. So the mainstream economics believe that bubbles bring to redistribution of wealth. That is that some people, those who have bought the assets, the houses when it was not high value, and sold it when it was with inflated value, they got rich. Those who have ultimately bought the asset and didn't sell it during the inflation period or decline period, they have their changes is zero. And those who have bought it on the peak and sold it when the prices went down already, they were broke. The point is that that the money has redistributed from one person to another, and it's not too much of a significance for the economy. Whereas the heterodox economics, such as Austrian economics and post-Keynesian economics, believe that housing bubble is a type of debt bubble because houses are usually bought by borrowed money, and thus it can cause a financial and economic crisis. This is firstly proved by empirical research because many housing bubbles were followed by crisis, financial and both economical. So, and that is the case also of 2007 global crisis. And as U.S. dollar, any collapse of the U.S. building, U.S. housing bubble has a direct impact not only on the values of houses, but also on mortgages, builders, real estate. It can cause a huge recession in the country, and as the currency of the U.S. is the dollar, which is globally used, it can also cause a worldwide recession. So the housing bubble, which the most recent one, we can see that it started from 1999 to 2000. You see that it started in 2000, and the ultimate point was in 2005, 4 or 5.
And again, steep decline.
Yeah, and again, it's followed by a steep decline, which caused the recession and worldwide crisis. More thorough examination of worldwide crisis will be presented by Michael.
Yes, it's me. Now we'll talk about the financial crisis of 2007-2008, which brought the recession of 2008 and to nowadays, 2012. I will think that on December 21st it will end.
We hope so.
Yeah, but now we're in a recession, and that started from 2007 and up to 2008. That was the deepest decline of all time, they tell, and they tell also that this economic fall was even worse than in 1930s, the roaring 20s, as Arsen told us. And if we talk about that, not every country in the world suffered from that crisis. Only several countries, for example, the most developed suffered. For example, the US and the Americas and the European zone. But for example, the CIS region, which comprises the Russia, Ukraine, Armenia, Georgia, etc., had the most ridiculous, for example, conclusion for that crisis, because mainly all countries in the CIS zone have reached a decline of more than 10%. None of them has reached a decline of, for example, 5% or, I don't know, growth, for example, like China of 2 or 3%. And Armenia had a fall of 18.4%, the worst in the zone, and the second was Ukraine, 18.2%.
Yeah.
It's
Yes.
it's not something. It's and if we talk about that more seriously, can we talk about it more South Africa?
South Africa, not South African Republic, just in South Africa.
Generally, South Africa.
Just in South
In
Africa.
the
region.
south.
Yeah.
started, as Robert said, with the housing bubble of up to 2007, and that started from 2004 when the share of subprime lenders of the mortgages rose by 2 times to 20 and more percent, and that means that maybe 20% of all mortgages given were high risky, and that's why when the economy faltered, the 1/5 of the loans were the economy faltered because of that 1/5 of the loans, and that continued for 3 years to 2004 up to 2006, and after that the home ownership fell up to 68.5%, which was even bigger than the subprime share of the borrowers. And that's why after that the steep decline claimed the start of the financial crisis. The main thing, contributors to this crisis were Freddie Mac and Fannie Mae, government subsidiaries, the government subsidiary entities that were mainly comprising the idea that the government must not give mortgages that are high risky, that the mortgages must be only given to the prime lenders, and that's why when Freddie Mac and Fannie Mae created a fraud of the US government, and they had given 13 million loans which counted up to $2 trillion. And that's why they say that the main contributors to this crisis were Fannie Mae and Freddie Mac, the government subsidiaries that were allowing other banks, other lenders to give loans with lower interest rates, and that's why the economy faltered. And that continued with the bankruptcy of Fannie Mae and Freddie Mac in 2008, and in November 2008, Lehman Brothers, the first company to falter, filed the bankruptcy file, and from November 2008, the economic crisis started to go even deeper. And in July 2008, the crude oil prices rose to unprecedented $140 per barrel, and that was the 1 month or 2 months before it originated the lowest point at $30.98. That fall was it was counted only in several months, 1 or 2 months, and after that the price indexes of all major indexes like Nasdaq index, Russian indexes like RTS and MMB faltered by several 10, 20, and even 30%. For example, Nasdaq has faltered 10% per day, which continued for 4 days. It has faltered by 40%. And and if we see the government's surpluses as deficits of the US from 1940 to 2012, we can see that only in several years, several periods of time in the US there was surplus, and nearly every time there was a deficit, starting from 1930s up to today. But it's not only the deficit that is ruining the economy. It's not, for example, the surplus that is growing the economy. It's the deepest slice of deficit. For example, if the deficit is growing even faster than the economy will falter. And that's why, for example, in 2009, the deficit of the United States tripled and rose to $1.5 trillion. And that continued for 4 years. And even now, in 2012, the government deficit of the United States is counted more than $1 trillion. For example, that means that for 4 years, the government spent more than $1 trillion more than had the revenue. And that's why America started to borrow a lot of money from China, from India, from Russia, the government that had surpluses. For example, America has a trading balance deficit of $100 billion, but China has a trading deficit of $2.6 trillion. That's why China can easily finance the public deficit, the budget deficit of the United States. And the main thing is that now they are doing everything they can. They are cutting the spendings of the government, for example. They are cutting the social spendings, and that's why there are many strikes all over the world, etc. But they are also rising the taxes to improve the revenue system, and they are changing the system at all. For example, they changed not only the rates, but also the taxation system. For example, they have a taxation of small businesses, medium businesses, and also large businesses. They are improving it, and they are also adding an even bigger participant, very large business, that is the giants of the economy. For example, IBM, and etc. Yeah, it's an absolute change of the policy. And they will talk about European crisis that is even in a deeper situation than in the US, because in Europe there are many states that have other different legislations. For example, in Italy and in France there are legislation slightly different, but for example in Germany and in Greece the difference in legislations are very great. They are greater than you can think about them. And that's why the greatest contributors to the European crisis were Greece, Italy, Spain, Ireland, and also now the list is also Portugal, and now the list is being enlarged by France and the UK. For example, many people think that, for example, France and the UK are great economies and they don't need to borrow money from other countries to survive, but that's only if you see it in a glance. But if you see it in the deep, France and the UK have great budget deficits, and they must finance that budget deficit. That's something, and that something is the budget surplus of Germany. And now Germany now is the only state in Europe that is working to save the eurozone and to save the euro at all. Due to Germany is a great state that all of the Europe is like a market for them. For example, Germany is producing many products that must be sold, and for example in Japan and in the US that the markets are very intense, and there are many companies that can contribute to faltering of German brands. For example, into Europe there are not many brands that can be a concurrent for the German brands. For example, the concurrents for the German brands like Mercedes-Benz, BMW, for example, and Volkswagen. In France, you have, for example, Renault, Citroën, which are not brands, for example. For us, they are not brands.
Bestsellers.
Yeah. They are bestsellers in France, but for example, in other countries, they are not.
Yeah.
And if we talk about the European crisis even deeper, we can say that they are making great steps towards prosperity and great steps towards saving Europe, because they have created one of the biggest, now analytics say that it is the biggest public sovereign fund in the world, European Financial Stability Facility, EFSF, that counts 1 trillion euros of funding. And that means that that fund is created by all of Europe to contribute to the countries that are in a deep crisis, like for example Greece or Italy or Spain or Portugal. And when they need some help, the EFSF, IMF, and also European Central Bank are giving loans to them in lower interest rates that they can, for example, have if they ask other companies like World Bank and etc. Because all that organizations are European controlled. Yeah. And IMF by Christine Lagarde from France, and European Central Bank, and also you will create it if you European Financial Stability Facility. But if we talk about Europe and America, that is very clear. But what about Armenia? If we talk about Armenia, I don't know. Armenia is a type of Europe, is a partner of Europe or partner of US. Or for example, it's Armenia is a partner of Russia.
No, I don't know.
No one knows because Armenia is playing its own game and no one knows what that can go to. And that's why we talk about Armenian growth, real growth rate, but not nominal. Armenian government is talking about nominal
Where have you
growth
found
rate,
the real one?
yeah, but if
But
you,
where have you found the real one?
in internet, but
Okay.
that's other people are posting this into the internet. And if we talk about GDP and real growth rate of Armenia, but the real growth, we can see that in fourth quarter of 2008, it has faltered by 6%, and that's why in 2008 we had GDP growth of 8.7%, I think. And after that, the crisis deepened in Armenia, and it started to view its own flowers, and for example, the crisis flourished in Armenia. And in 2009, the economy faltered by 7%, after that by 18% and 20%. And that means if we average all these numbers, it has faltered nearly by 18%. That was the deepest crisis in Armenia. After that, in 2010, what?
Boom of the
Yeah,
crisis.
it was the boom of the crisis. And after that, in 2010, it's only the 2 quarters of 2010 when the real GDP growth was 5.4% and 6.7%, but it doesn't have, the statistic doesn't show the third and fourth quarter of 2010 when the inflation of 10% has occurred in Armenia, and that's why real GDP growth rate has faltered also by 10%.
So it's good that we do not have.
Yeah, if we do not change the statistic is great. It's for our government. And the inflation has continued to rise even in 2011 and 2012, but in 2012 it is also only 6% or 5.7%. 6%. It's not a great number for us because we have even great numbers. But in 2011 it had 10% growth of inflation. That's why if you look at the price indexes of Armenia, it's the price deflator. That means not only the inflation, but all of its prices, the index of all of prices in Armenia, not only, for example, consumer prices. And if we see starting from 2008, every year the prices in Armenia doubled. 90% rise, or 96% rise.
And I can see no decline. It just
it rises, but even worse. It's doubling every year and it's continuing to rise. And if we continue to say about Armenian government analytics, they say that it's great, we have a great 9% rise of our economy. For example, in the third quarter of 2012, our GDP rose 9%. In comparison to the first quarter of 2011, and if we compare the first quarter of 2012 to the second quarter of 2012, the rise was 44%. And that's why we are like a boss. And I don't know. If we continue to talk like this, we can continue to talk for years. We must act to resolve our problems in our country. And please, Arsen, I must ask you to put
A song.
a song about that.
About this
You have a song?
About
You have song?
Really?
What are you going to do? Facebook.
Oh,
yeah.
good.
You are going to
We're
sing?
going to listen to the song.
The greatest bubble of nowadays is.
Oh my goodness. Cool. Can I get a song?
No.
It's just Michael Bubble.
He's a bubble.
Vai mi-ați recordat, mi-a Tajikistan.
Oh, come on.
Kan ni Norris denek? Kan ni Norris denek? Dynamic, Feeling good, huh? You know how I feel. You know how I feel. It's cool.
The greatest bubble of 2011.
Relaxation after the crisis.
And Armenia will feel good in several years.
We won't. We are feeling good, guys.
Yes.
Come on, we're feeling good always and everywhere in Armenia.
It's a new dawn.
It's a new day. It's a new life.
It's a new life for me. For us. For us.
For us.
And I'm feeling good.
But we do not have the lyrics to sing with them.
We can because there is already. We may have.
We can do it. Armenia's feeling good.
Yeah, it's not lyrics of the
You know how I feel, don't you know? Having fun, you know what I mean. Feeling it's
I want to dance.
That's the end. Thanks. Goodbye.